I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg.
Hey, good day to you,
Good day
John.
to you, Greg. Now, Greg, tell us about the Market Week report.
Well, this week's report is pretty eventful. I mean, you talk about last week. You had the midterm elections, and then you had the Fed launching their quantitative easing number 2. And these events, perhaps a combination, the animal spirits on Wall Street soared last week. The S&P surpassed its April 23rd high of 1217, and the Dow hit a level not seen since September 2008, and this was before the fall of Lehman Brothers. So as the Fed's decision raised concern about potential for future inflation, we also had the dollar, it suffered, and gold rose sharply to just under $1,400 an ounce. So year to date, the Dow is up about 9.5%, NASDAQ up about 13.5%, and the S&P about 9.5%. You know, some of the other headlines, John, last week was the pace of the economic recovery is slower than what the Fed would like to see. So it's cranking up the printing presses. It's buying $600 billion of long-term government bonds between now and next June, and they hope that this second round will, start pushing things higher and pushing the economy, getting it going. And the private sector shortly, Friday announced 151,000 jobs in October. Some people are now questioning, do we even need QE2 from the Fed? But only time will tell whether this private sector job was just a temporary hiring or if it's something that will be sustainable. But we did see U.S. manufacturing. It saw their 15th straight month growth in October. The Institute for Supply Management Index rose to 56.9 from its September 4.4%. So any number over 50 indicates growth, and we're continuing to see that number stay fairly firm and increasing somewhat. So all that said, we've got some good things happening. There's kind of still some mixed news. Residential real estate still down, but yet we see other areas of the private sector possibly starting to pick up. Had GM announced details of its pending initial public offering, which is tentatively scheduled for later this month. This would be one of the largest IPOs in U.S. history. This IPO, John, would enable the Treasury Department to begin selling its roughly 60% stake in the company. If we take a look at the week ahead here for us, somewhat shortened by Veterans Day on Thursday, investors will likely watch for any smoke signals out of Washington that suggest what might happen on tax cut extensions when the lame duck session of Congress reconvenes the following week. So we have balances of trade on the 10th of this week and the consumer sentiment on the 12th. I will say one other thing. We've mentioned about some of the record prices that we've seen lately in move, as far as the types of move. September was a great month for the stock market. You have to go back to the probably 50 years to have a better September. So we're having such a great move. So the U.S. may be at a pivotal point. The current momentum could carry us up and away, or the recent strength could be nothing more than a mirage fueled by trillions of dollars of physical and monetary stimulus that eventually comes crashing down. Either way, we are here to help our clients navigate the road ahead. John, let me close with a quote that was on CNBC November 4th from John Malloy. John Malloy is he's an executive producer at CNBC. He said, despite the monster gains off the bottom, the S&P is still just at the highest level since September of 2008. It will take another bull market or gains of more than 20% to get back near its all-time high reached in October of 2007 unquote. So that quote gives us an idea. Even though we've come a long way, we've still got a long ways to go. So keep diversified and keep looking ahead.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CDTV.net.